Hello, I'm Cory Burnell, and I'll be your host for this edition of Inside View. I want to thank you for joining us again, and we have an exciting show for you. We're going to be talking with Tom Pratt, who's a local insurance broker here in Calaveras County, about things going on in the insurance market. Particularly, I know you homeowners are going to be interested to hear what he has to say about fire insurance and the issues that we've been having with it lately. So, Tom, thank you for joining us.
Well, thank you very much. I appreciate the opportunity to be here, Cory.
Yeah, you bet. Well, this is a fairly new subject to me, so I think it probably will be for some of our viewers too, about what's been going on, in the insurance market with people getting non-renewed with their homeowners insurance. So we're going to dig into that in depth today. But first off, let's let everybody know a little bit about you and who you are and what you do.
Well, sure. Thanks. I've been in the insurance industry for 32 years. I never thought it would be as interesting and as exciting as it is right now, because it's a real challenge to try to find insurance for folks. And also too, is the aspect of that I really believe in what I'm doing because I'm helping people and helping the economy, because so many people will call me and I'll get people and they're crying because they think they're going to lose their home.
Wow.
And we have so many people on fixed incomes up here, and it's just it's very frightening as to what's happening to the also the local economy.
Yeah. Well, now you're out of Murphy's, right? And
Correct.
Yeah. How long have you been there, Tom?
I've been there since 2008.
Yeah. And your wife was born and raised up here, I think?
She wasn't born, but she was raised up here.
Yeah.
Correct. Yes.
Okay.
And so she loves it, and we have great quality of life. Everybody that comes here, and good schools.
Yeah.
And so it's a wonderful place to be.
Sure is. It's why we're here. You know, my wife's born and raised here and does lots of family and friends. So great community to be part of. And that's why I think you find it probably so rewarding to be helping people. You're helping people right there in your own community.
Exactly.
Yeah.
You're right. And it is nice to give back.
Well, now, as an independent insurance broker, let's let our viewers know what type of insurances you deal with.
Certainly. Mm-hmm. What I deal with is what folks should know first. As a broker, I don't work for an insurance company.
Okay.
I work for the individual. So if you wanted to go buy a policy, I would basically negotiate on your behalf with the insurance company to get you the best deal, the best coverage. Mm-hmm. And so I do that, and then I work with to present the best option, and then I come back to the person. So I'm not an agent. An agent usually works for the insurance company, like a State Farm or something like that, or Allstate. So I can work with anybody in any different insurance company.
Okay. And the lines of insurance is property and casualty, things like homeowners and auto and that.
Correct. So it's all property like homeowners, liability insurance,
okay,
and auto insurance too.
Yeah. Well, we know that the economy has been hit pretty hard, you might say, by what's going on with the real estate market due to non-renewals with fire insurance and homeowners insurance. Will you talk a little bit about that and what you're seeing on the
Sure.
on the streets right now?
Well, I predicted this was going to be happening after the Rim fire, which was in 2013, and I would talk to a lot of different agents and to people saying that, look, if we don't get a solution to this problem, it's going to dramatically impact our local economy, because we derive on these second home dwellers that come here, and it's all about the we're a tourist-based economy, particularly where I live in Murphy's and Arnold and up the corridor, and nobody really heard me. Then the bark beetle hit, then the drought, then all these other issues started happening, and then the insurance company started pulling out.
Interesting.
And so then it started to change people's attention. And then with these last fires, I think in 2019, the insurance industry in California lost $20 billion, that's with a B, billion dollars in claims that they paid out.
Wow.
And which takes them back to premiums written to like the early 70s, I believe. So there's a lot of situations that has taken place. And so we have to find a solution and work together.
Well, so what's really happened in the insurance market is the free market players have just decided that's it. We're out of California. We're not going to insure homes against fire. Is that really what's happening?
That's correct. There's a Proposition 103, which is like in the mid-'80s, that the voters of California basically said that, yes, we will now have an elected insurance commissioner. And so with that came that they can approve rates by the insurance company, but they have no authority over the free market. So they can't say to all these people that are writing insurance, you have to stay here and write in Arnold.
Sure.
It's a free market. And so the insurance companies are taking that opportunity to leave and not provide the coverage.
Begs the question, typically a product or a service will be provided at some price, but there's just no price that they'll provide private sector insurance, and is that because there's a lower cost government option that's below what the private sector would offer? Right?
That's a good question, Cory. But what's happening is they aren't even looking at, if somebody has done, like cleared their trees or hardened their home with, doing all kinds of things to keep the fire prevention from fire. They're just taking their bag and running away, and they won't even bother. And so then now that leaves the FAIR Plan, which is the California FAIR Plan, which is the government-run entity. And with the rates there, they're usually higher than what folks were paying before with a regular homeowner's insurance.
Oh, wow. Okay. Now, the FAIR Plan does it cover multiple things, or is it only fire?
It's only fire.
Okay.
And so then what you have to do is then you have to buy a supplemental policy, or what's called a difference in condition, or DIC, and then that basically wraps around with the FAIR Plan to give you a comprehensive insurance policy.
Okay.
But you've got this cost and you got that cost, and so it's a lot.
Yeah. Yeah, so is the FAIR Plan the only government-offered plan, homeowners insurance? In other words, is the supplemental that people buy available from private sector companies, or is the supplemental also offered by the government?
No, the FAIR Plan only offers it just writes fire, and then the supplemental is offered by the free market.
Okay.
Because there's not that the fire catastrophe. All they're covering is liability, water damage, things where there's usually not very many losses. And what's interesting is that of the thousands of people that I've talked to, I've had maybe 4 people said they had a claim. That's it, just 4. And I'm just like flabbergasted, like, this is really good business. Why are you running away?
Right. No kidding.
Yes.
That is something else.
And so with the FAIR Plan too, that the insurance commissioner tried to regulate them, to tell them to create a comprehensive policy by 2020.
Okay.
And this was like last year and then just last week, a judge ruled in favor of the FAIR Plan because they were fighting it. They don't, because all they know is fire.
Okay.
They don't want to write liability. They want to increase the costs and the expenses. Then that would make the policies even more expensive. And so the judge ruled in favor of the FAIR Plan and against the insurance commissioner, so that the FAIR Plan will stay as it is for right now.
Well, that's something else. Yeah, boy, my mind goes to that the private sector would be able to price the risk of fire perhaps more accurately than government may do so, because there may be competition introduced there to figure it out, what is the cost and the actual risk. But so this is disconcerting that it could be a real problem to taxpayers if the risk of fire is not priced correctly by the FAIR Plan. That's just my mind running away with what are potential outcomes here of things going bad here.
Well, what's happening too now is that there's a whole big kind of a segue of insurance and technology merging together. So there's a lot of firms that are starting these risk modeling and these catastrophe exposures, so they know and can predict based on loss history, based on home hardening, everything else, so that they know what they can predict in the future. So there's firms that are creating these new algorithms, so to say. And I don't think the public sector has that type of equipment yet, but there's a lot of, it's called InsurTech is the new movement.
Oh, wow.
And there's the trillions of dollars that are going into this particular industry.
Well, it makes good sense. I mean, I'm taken back to, say, Hurricane Katrina and the losses to insurers there. I mean, that
26 billion.
Yeah, hammered their stocks, I remember at the time. Well, talk a little bit about what you're seeing on the ground as far as the impact that these non-renewals are having on the real estate market and on our economy here in Calaveras County.
What I'm seeing is that there's been a slowdown in the number of homes that have been purchased. I know that before the end of the year, it was quite slow. And now that, I mean, that interest rates are, relatively low, there has been a little bit of a pickup. But with the homeowners, it used to be the last thing that you needed when you closed escrow was insurance. Now it's number one.
Sure.
And when it's like, usually, like if it was like $1,000 a year, it could be anywhere from like $3,500 to $4,000 to $5,000. Sometimes I'm hearing people $35,000. In fact, one guy I had was here in the county, $35,000 he got offered, and I got it for him for $4,000.
Okay, wow.
But
he got priced at $35,000.
$35,000 was his renewal quote.
And that was from a private sector company.
That was from right.
And then Fair Plan did it for about $4,000.
$4,000.
Okay. Yeah.
So it was, but there is no rhyme or reason to the Fair Plan. I can't. Everybody asks me, well, what's a ballpark? And I'm like, I can do that on anything else, but I just can't on this because the algorithm will change by one day or whatever it is. It doesn't. There's no consistency.
So you can have people perhaps on the same street, neighbors you might say, getting different rates.
Correct.
For the Fair Plan, even for the same square footage of home. And
Are
there any site visits by someone coming out and taking a look at your home before writing the insurance?
They don't before because of the. I'm sure it's because of the cost component to it. But they will come after and inspect.
Okay.
One of the more interesting ones I had was a gentleman had medical 6 plants or whatever.
Yeah.
And the Fair Plan canceled them.
Oh, no kidding.
And the Fair Plan's not supposed to cancel anybody. And I said, well, wait a minute, that doesn't make sense because it's a state law. It's a state-run agency. This is federal, but we can't do that. And so the poor guy couldn't get insurance.
Wow.
So it's
that's something. Now, when you said it's federal, you're talking about the plants being illegal federally?
Right.
Yeah. That's something else. Here we have a state-run insurance program, and those plants are legal. Now, maybe they were concerned about the cost of the plants if the place goes up in smoke, so to speak.
That'd probably be a pretty good claim. So, but
oh, that's something.
And then the Fair Plan, the one thing where I have seen them, not insure people is the roof.
Okay.
So depending upon the age and the condition, and then they will come out, and then I've received notes from them saying that you have to fix this by the renewal date with pictures.
Okay.
So it's not a real complicated thing. It's more of the other wraparound people that come out, and they'll ding you for every little thing. There's a lot of there's a nice big checklist.
No, okay. Those are the supplemental insurance.
Correct.
Coming out. Okay.
And then again, that's through the public insurance. I mean, the private insurance.
Yeah. Okay. Well, so we talked a little bit about rates people can expect, and you really can't even tell somebody a ballpark number in our community about, well, if your house is such and such a size, what your fire insurance may cost, huh? Is that just not even possible with a Fair Plan? It's not that haphazard, huh?
That is. It's a moving target.
Yeah.
And so I try my best because I want people to understand, what's happening, and it's. When this crisis first happened last year, I would get 25 to 40 phone calls a day. Mm-hmm. People just panicked, people trying to get their coverage. It's starting to level off because I think we've gone through this cycle of all the people getting the insurance, and now I think people know what to expect. I think they were just, one was sticker shock and just absolute shock from what they had to pay. And what that has done, people are leaving. They're going to other states because of the cost. It's having an impact on all the other ancillary services, from the realtors to the mortgage brokers to even down to the contractors. I was talking to a contractor who hasn't worked in 3 months because people are not putting money into the homes because of the cost.
Yeah, that's astounding. When the impact on home prices that this may have had could be interesting. I mean, what have you seen? How's it impacted home prices today, maybe relative to times in the past, maybe pre-crisis, post-financial crisis, and then today? Where have home prices been in the past, and how are they holding up relative?
Well, they've rebounded pretty well. Prior to the recession of the 09 recession, housing and the average in Calaveras was around $426,000. After the recession, it took a dive down to about $239,000 was the average.
Wow.
And now we're running it around about $358,000, $360,000, somewhere around in there, and seeing a little uptick. It's still and we're seeing major growth within Valley Springs and Copper.
Okay.
And that's where the largest increases are, but it's still holding its own in up the corridor too.
Okay. But you say that some people have decided, you know what, I'm not going to put up with this fire insurance hassle and the expense, and they've decided to put their homes on the market and go elsewhere, huh?
That's correct. Or they just buy the fire insurance, and that's it. They'll just buy the FAIR plan because if they have a mortgage, they have to have insurance.
Yeah, that begs the question. So if somebody gets a non-renewal and they've got a mortgage, if they do nothing, what happens to them?
Then the bank takes it over. I mean, basically it's what's called they don't take it over, but it's called forced placement.
Oh.
And so then the bank will then insure it, but then they'll charge the homeowner even more than the FAIR plan. And it's a lot of money. And so it's something that you don't want to get involved with.
Yeah, you want to do it yourself.
Exactly. Save yourself some money and some headache and heartache.
Yeah, no kidding, huh? Because the alternative is come up with a bunch of cash and pay the mortgage off, huh?
Right. And so, but I see people doing more and more of that. They're buying more catastrophic coverage.
Okay.
So they're buying with a really high deductible, like $50,000. It's kind of like the health insurance crisis that took place. You're just buying catastrophic coverage.
Yeah, talk about that a little bit. So not all coverage with the FAIR plan is equivalent. You have different choices, do you? Is that what you're talking about, or is all coverage equivalent with the FAIR plan, but this would be private sector?
Right.
Station?
Well, it's with the FAIR plan. It's the maximum limit that they can offer is $1,500,000.
Okay.
So I mean, here that's fine for most of the homes. I mean, we average, I would say the bulk of the homes that are sold are between the $300,000 to $500,000 range. But you take the rest of the state.
Sure. Yeah.
200,000 people have been non-renewed.
Yeah.
You take some place in San Francisco, well, 1.5 million is not going to insure them. And so the FAIR plan is not the place to go for everybody. Okay. And it offers the same types of coverages, but it's not quality.
Okay. So when you talk about private sector offerings not really being available for people, I mean that these insurance companies have just taken the product and left the state. This is kind of the lower deductible plans that may be more comparable to the FAIR plan, whereas the private sector still has high deductible catastrophic plans, or
they could do either or. The FAIR plan has like $10,000 is the maximum deductible that they will take. I will, I had somebody today for $50,000. They wanted a $50,000 deductible because they said that I will pay cash. All I'm worried about is if the entire structure goes. That's what I'm worried about.
Okay.
And so they really are concerned about that.
And there's a private sector solution there.
Not per se for that was just for the wraparound. I should
the
qualify
supplemental.
that.
Okay, that's where my confusion lies. Okay.
But the FAIR plan, no, the 10,000 is the maximum.
So that's the fire situation, and then these other high deductible plans are supplemental plans.
Correct.
Okay, now I understand.
Correct.
Okay.
And so the FAIR plan is just it just doesn't cover everything that you need. Well, it does cover your contents. It covers so like your clothing or your furniture, things like that. But it's in other structures.
Yeah.
But we haven't been hit that hard yet to see how they respond to the claims.
Okay. Yeah, that's a good point. Do we have any examples of how the FAIR plan has paid out and acted as a result of, say, the Paradise fires or Sonoma, things over in the Bay Area, the fires that we had a couple years ago? Were there any on the Butte fire, any FAIR plan claims that happened with the Butte fire?
I'm sure there were, Cory.
Yeah.
That's an interesting question. I don't know the data on that because this crisis occurred primarily, it escalated after the Camp Fire.
Okay.
And so there was a couple of insurance companies that actually went out of business because they were writing all kinds of policies and they obviously exceeded their surplus, so they couldn't pay the claims. And a lot of the companies that were there were pretty good about handling claims, but still, there's people still trying to settle, from the Butte Fire.
Yeah.
They're with the insurance company, which is just unfortunate that they have to go through that.
Yeah, it really is. Man, okay, so we've talked a little bit about the economic impact. Are you seeing this, maybe there being a solution here and a rebound, or are we in for just continued trouble and hassle with regard to fire insurance for the foreseeable future? Any solutions on the horizon?
Well, I see there's two.
Okay.
There's some of these the insurtech firms that are starting to basically model better and wiser on the how to write these particular insurance policies. They're going to come into the market.
Okay.
They'll come into the marketplace, but when that happens, I don't know. I talked to the insurance commissioner about trying to start a public insurance company. He told me he didn't believe in it. And then now there's a whole big change because then he mandated the FAIR plan to basically do what I just told him. I said, do it.
Yeah.
And so he now is he's seeing the light that we need to do something because of all these crises that have happened in the past, a public company has come out of it. With Northridge, there's now the California Earthquake Authority. Policies, left the private insurers, and then they still went to this agency. Then now it's all leveling out. Then there's also the workers' comp, the workers' comp insurance guarantee fund. That all came out of problems. Now they're a very competitive entity that competes against private insurers. And so it's something that we need to look at and to invest in to create this type of competition's good.
Sure, it generally drives costs down.
Right.
Yeah, interesting. Are there things happening in our community and across the state that are reducing fire risk?
There is. There's a lot of awareness, particularly by CAL FIRE, have been outstanding. By meeting with all the different homeowners associations, with all the different groups, to talk about home hardening, talking about brush clearance, keeping at least 100 feet away from your home, talking about to gutters. I went on a tour with CAL FIRE, and they told me the number one reason how the fire spreads in a wildfire is debris in the gutters. So it gets into the gutter, catches fire, goes into the roof, it's gone.
There you go, game over.
And so that's all part of the hardening, the home hardening process. There is legislation in this now that trying to get a tax credit for homeowners, that they can provide a receipt to say that they did something to make their home fire safe.
Oh, okay.
And so hopefully that will happen and that will pass pretty soon.
Okay. Yeah, I asked the question because it seems like if if fire risk is reduced, then the cost of insuring against it ought to decline as well, and it may be a more attractive space for insurers to re-enter and compete again. But I think that would have to be demonstrated on a grand scale, I would expect. So that's a good tip for homeowners as far as the gutters and that protection. Other things that homeowners should do, you talked about brush clearing.
Brush clearing, there should also, if you can, on the siding, to try to get concrete or something that's a little stronger, a hardy board
Hardy
that
plank.
can resist the fire. Windows, vents, make sure that you have vents. There's that they're closed, that you can close them, because embers can get in anywhere, and then they can cause a fire. And to make sure that you have plenty of hoses around your house too, which is another thing that doesn't get mentioned, but that can also prevent any embers from flying and catching on fire.
Yeah, it's fascinating. So then with the supplemental insurance, do you have, it sounds to me like, I mean, customers only have, as far as fire goes, they only have the FAIR plan to choose from right now. But as far as tips for shopping with the supplemental, I mean, is it as simple as just, hey, find a broker you trust and have them do the shopping for you, or are there other things that the customer ought to be considering and thinking about?
Sure, you can do that, or a lot of times their existing insurance provider will offer that particular coverage. So if it's like, say, Allstate, and they have your auto and your all your liability and then your umbrella, and they can give you a multi-policy discount. And so sometimes it's best to stay there. And I'll advise people that, stay there. I can't do anything better for you, because I think that's, to be honest and let people know. I'm not in it just for the buck. I'm in it to make sure that, everybody's okay.
Right. Well, that is the nice thing about a small, nice, tight-knit community like we have. Everybody knows each other, so you got to do right by people.
The best check and balances ever.
Yep, that's right. Yeah, it's like, your kids being out in the community. I know you have a couple young ones. Hey, somebody knows you and knows what you're doing and what you're up to, and they know us, and they'll tell us. So.
You're absolutely right.
Well, we got about a minute left. Is there any last thoughts you want viewers to know about the subjects we've covered now, or anything else they should do to follow up?
Well, I think to stay informed and be competitive. Go out and shop. That's what I do on people's behalf. But shop. Make sure that you're getting the value for what you're paying for. And then also too is like, use me as a resource. I'm available. My phone number is on the screen here.
Yeah.
Call me. I'll tell you I'll give you the straight scoop.
Yeah.
I really will. And I'll tell you, and if I can do better, I'll let you know.
Excellent. No better deal than that. Tom, thank you very much for joining us. I mean, this has been great information.
Well, thank you very much for having me. I appreciate it, Cory.
Yeah, and to our viewers, thank you for joining us on this episode as well. Again, I'm Cory Burnell, and I look forward to seeing you next time on Inside View.